And I think actually Diana gave us a really good intro to that panel, as in what would it take to onboard my grandma, my mom to Web3. And whenever I think about that question, it resonates with me that there is so much to unpack there. There is how to onboard them on a technical level. There is building up the right use cases so that it makes sense to onboard them. Like, we're not going to onboard my mom to Aave just for fun. And then there is building that whole level of understanding so that this is normal for them, this is understandable for them, something that is familiar to them. And when I think about that, it resonates with me how far we are from mass adoption. And I want to tackle that topic today with you. But before we go on, I want to start with giving guys some floor to make your intros. You know, I know you, but I would love to for the audience to know you as well. So let's start with Ram. Shimon. Of course, we know each other very well. For those of you who don't know, we used to work together for a long time. Mass adoption was always on the front lines for Ramp. Tell us a bit about yourself and about Ramp and how Ramp pushes mass adoption. Be brief, because then I have more questions about that.
All right. 7 years ago, we ventured to start building best-in-class onboarding experience into Web3. We knew that the entire stack of fiat to crypto is built for traders, and that the trading use case for crypto turned out to be foundational, but this is not what we are here to do in the long term. So I decided to build something that would allow people to actually onboard to products that provide more of mainstream kind of use cases. And we were very early, because 7 years ago there were basically no crypto products, but we knew that this is coming. And fast forward to today, with 6 million registered users and hundreds of apps integrated, we are one of the biggest providers of this service. We work with so many companies represented here, which always makes me smile when I see a familiar logo here. But we still think that there is a big challenge ahead, and there is still much to do, because getting onboarded into crypto is still not as easy as buying something online, and this is the goal for us, and this is what we are working on right now at Ramp.
Amazing. You mentioned that early on that early adoption of crypto was driven by very speculative use case, and that is the first thing that comes to mind when we say that is the exchanges, which leads me nicely to Michaela, who's representing institutional sales at Binance. Michaela, would you like to introduce yourself?
Absolutely. Thank you so much. A pleasure to be here. I don't think I need to introduce Binance that much.
No, you don't have to.
My name is Michaela. I cover Binance VIP and institutional for Europe. What we do with Binance VIP and institutional is cater to high net worth individual or corporations. On the corporate side, we work with a wide range of clients, hedge funds, market makers, family offices, prop desks, trading platforms, and more. We do have quite a big crew in Warsaw this week. If you catch us around, we have David Prince, president of Binance France. We have Natalia, Ivan, and our CMO is also here, Rachel Cullen. Happy to tell you more about what we do after the panel.
Let me do my segue there. So early in the day, when I think a few years ago we were organizing a hackathon. That was one of the first hackathon I actually participated in that, and it was a long time ago, very early in the crypto space. And back in that hackathon, almost half of the ideas were things that kind of work in Web 2, but done on top of Web 3. And Brandon here is working on bringing Web3 to travel industry. So kind of going the other way around, taking like very traditionally Web2 sector and turning it and using the rails from crypto into making it more efficient, more streamlined, and of course more decentralized.
Yeah, thanks so much for having me. I'm Brandon from Sleep.io, and we're the first hotel booking platform built on chain. Currently, we have roughly about 750,000 hotels globally live. We accept over 300 cryptocurrencies, as well as traditional payment methods. But obviously, being a native Web3 company, we do push more crypto transactions than traditional payment methods. So what we really saw within the travel sector is how hotels and hotel groups are losing their power to booking platforms. I doubt anyone knows, but your traditional booking is actually getting charged up to 25% within fees, and that's due to the middlemen in between the user to the hotel. So we saw the gap within the industry. My team has over 25 years experience within travel tech, that all these hotels and groups are complaining how they've lost their power. And we saw with decentralization, we are able to cut out all the middlemen, and we are able to be the direct linkage between the user and the hotel. We also realized that there was no, I would say, traditional booking platform that was targeting Web3 communities and crypto-based conferences. And that's where we saw we were able to fit in, to bring back the benefits to attendees, to the communities, and allow users to travel more freely with their cryptocurrencies, as well to get these conferences, attendees and community members closer together, allow them to move freely with their crypto. And I feel, being within the industry for so many years within the NFT side of things, I feel community narrative is so important for that community to be closer together, as well to be able to use their crypto freely, as one should be within services.
Nice. You mentioned communities, and when mentioning communities, one cannot omit Cello. So Cello is one of the early teams pioneering adoption through community empowerment. And we have Kate with us here, and I think like half of or almost entire Cello team. So
yeah.
There's a lot of you guys there.
Yes, we do have a lot on the ground today. Thank you so much for having me. I'm so happy to be here. As you said, I work actually on the C Labs team. We are working on Cello. And for those that don't know, Cello actually launched on Earth Day of 2020 as a layer 1 blockchain. We really focus on low transaction fees, one block finality, we're carbon negative as a chain, and really addressing real world use cases and real world assets. And last year we actually announced that we would be transitioning to a layer 2 on Ethereum. So we are currently in the process of doing that, and we'll be launching our ETHWarsaw L2 testnet at the end of the month. And all of those things will continue to stay true as we become an L2. And our mission from the very beginning has been to really create the conditions for prosperity for everyone. And I think that, community is a huge focus for us. And thank you.
So guys and girls, folks, let's go with that. I mentioned at the beginning that mass adoption is a complex issue, and it's difficult to define what we actually mean when we say mass adoption. So I want to ask you, what do you define as mass adoption? What would you identify as this "we've made it" moment? I know that Shimon likes to call it the iPhone moment, so we can also call it the iPhone moment. So the moment where it becomes obvious that a given area, a solution is going to be used, is going to get that massive traction, something that you see, okay, we made it. What do you think what do you think mass adoption actually means for crypto? And do you have this perfect definition of that perfect moment where you're sitting here, you're looking at what's being built, and it's like, okay, we good. Now we just have not to break it too much. Maybe let's start with you, Kate.
I have a lot of thoughts on this. I think mass adoption is definitely acceptance and usage. It's accepted, it's used, but I think that there are different categories of mass adoption as well, and there's different communities that will adopt quicker than others. Cello really focuses on the Africa market. We actually launched a app with Opera Mini last year called MiniPay, and in the last year we've onboarded 3.5 million users to this wallet, and we are seeing 550K plus daily active users. So to me, that is a piece of adoption. Now, MiniPay right now is in Nigeria, Kenya, South Africa, and Ghana. And I think that we'll expand those regions. But I think in Africa, we're seeing a lot of mass adoption there. In the US, I think that mass adoption looks very differently. And in Europe, I think mass adoption looks very differently. So I think I tend to look at mass adoption in these different communities. But I think at the end of the day, the key is really this like acceptance and this usage of this technology.
Yeah, mass adoption and developing regions and mass adoption in the more developed ones, it's very, very different. We have different patterns of use. We are motivated by different things in there. So it's really interesting to see how that concept is very geographically associated with that. Simon, what's your definition of this iPhone moment? We're going to have to share with the mics, but I think we should have one more. One extra. Thanks, Diana.
So I thought about it a little bit this morning, and I realized quite recently that there's more crypto users in the world than PayPal accounts. And I don't think anyone would say that PayPal is niche. So I think on one hand, one could say, oh, wow, it's like almost 600 million people having had some sort of interaction with crypto in the past. Seems massive. That's a lot of people. It was hard for me to believe, but that was a data point released by Binance's research team, actually. So I find it trustworthy. And then I started to sort of like digging into what I would consider to be mass adoption. And I think for me, it's less quantitative and more qualitative. So I rebranded this in my own head from mass adoption to the oh shit moment. And I started thinking about, okay, like what would be this oh shit, this is really good moment for us in this in the Web3 space. And I realized we probably all are trying to get to the point where using Web3 would actually get your mom to say, oh, that was it. So my alternative name for that is that was it moment. And this is also very similar to this iPhone sort of parallel, right? So it has to be so simple and delightful that it's almost unbelievable. We're not quite there yet for Web3, but if you zoom out and sort of think about the use case of just buying some crypto to own it, regardless of whether this is decentralized, non-custodial, etc. If you just go to Coinbase and buy some Bitcoin, you can say, oh shit, like that was it. And I think we are there already in this sort of investment buy and hold use case. And now the question should be, how do we scale that to real Web3? So how do we scale this oh shit moment to actually putting all this crypto to work? And so I dug a little bit deeper, and it seems like there's like 60, 70 million of monthly active users. So, a lot of that is just moving money between exchanges, but like, let's be generous and say that half of it is like actual usage. So let's say 30 million, maybe 40. And we can see that less than 10% of crypto users are actually Web3 users, which should make us think. Like pause and think, but at the same time, it should also give us a lot of optimism and hope, because we've been through this journey. Like we faced very similar usability issues in terms of the investment use case, and we basically pushed through this. And in just a couple of years, a bunch of great companies got built with great products, super easy to use. And now we just need to scale this. And this is why at Ramp, we're trying to get to this level of like delightfulness, ease, simplicity, at the level and stage when people are trying to actually put crypto to work.
Yeah, I think that that parallel between crypto is not Web3 is like very important, because sometimes we tend to sit in that Web3 bubble and we forget that crypto exists. We're like right now we're at ETHWarsaw, Ethereum focused conference, and when you go, you don't really need to step very far. You just like step away from the L2 bubble, and then it's like, oh, there are like other chains, there are other L1s. they have users? What is that? So I guess sometimes we forget about the fact that crypto as a whole is already recognized, and it does serve its purpose. Like its purpose is to store value, allow people to speculate and use them as financial assets. So I think in that sense we can agree that there is some part of mass adoption already reached, and that leads me nicely to Michaela, because Binance is all about that initial use case. And how did it change for Binance? Have you always had the same? What was your definition of mass adoption?
For us, we are highly focused on the number of users we onboard Web3 and crypto. And this takes me to the question of what are we have made at moments, right? And for Binance, one of our highlights was crossing the 200 million users this year, currently sitting at 290 million users to be exact. If we continue that trend, that means that by 2025, 2026, we'll be at 300 million users, being the exchange that have impacted the most in terms of mass adoption, the digital assets industry. Another we have made a moment for us was to secure the 19th license in India. For the ones that are highly in tune with this, this is one of the most difficult jurisdictions in digital asset space, but Binance have made it, Binance have locked it. And locking licenses is also a catalyst for this to operate with the highest standard. And lastly, just to highlight those we have made at moments, it will be, we also pioneer one of the most disruptive products in the institutional space lately, which is called third-party banking custody. We were the first exchange in the world in creating a bridge between the traditional world and crypto for asset managers and traditional firms, where they will still be able to use their banks of preference without leaving that activity, but connecting that with their Binance and settle their trades with us. I just wanted to wrap up my intervention by saying Binance itself is a vehicle of mass adoption. And our leaders, which you all know who they are, have made a splendid work just pioneering that path and just making sure we onboard the next billion users to Web3.
Brandon,
I have a follow-up question. Do you track separate numbers for like crypto users and like people who you would consider to be Web3 users that got into Web3 through Binance?
I know so many people who would pay for that data. This is like brilliant set of data.
You mean how we segregate?
Yeah, do you segregate?
Yeah, certainly. I mean, there are many ways we segregate the data. We segregate it by product. We segregate it by, for instance, how many people use our newest Web3 wallet. So it depends on the product for us. Overall, when they are onboarding to Binance, we would like to think that the moment that they sign up, they're already like crossing that bridge, opening the door to Web3. Okay, and then you segregate that data based on the products. Yes. Yeah.
It's a nice segue to the metrics point. So Brandon, also at you, what's your we've made it moment, and especially in context of kind of like adoption through use cases, but also what metrics do you use? Like, how do you measure mass adoption on your end? Because we have different. We talked about very like quantitative ways of measuring that. So like number of users, how much we have onboarded, but also their qualitative metrics. How many people use the Web3 wallet versus the exchange wallet? How many people interact with dApps and so on? So what's that for you? What's that for Sleep?
The way I view it within mass adoption within the travel sector, it actually plays a large role within your global GDP. As of last year, travel and tourism made up of 9% of your total global GDP, which actually is an extreme large sum of funds that is actually getting pushed through the travel and tourism sector. And from Sleep's perspective, it's obviously to onboard as many Web2 users into Web3 travel, just because of how much they can save. They don't even need to know how to create a wallet, because you are able to sign into our platform with your social media and we'll create a wallet for you. That way we're onboarding many Web2 users into Web3 travel without them even knowing it, and that way it's getting them more involved within a sector that is completely new to them. But I would say the main goal and the bigger vision, what I see for Sleep, is onboarding hotel groups directly into Web3, because the infrastructure of these groups are extremely outdated, within my opinion, and will take a lot for this infrastructure to completely move into Web3. So for us to being able to build exclusive white labels for hotel groups, that way we're able to onboard that entire hotels group into Web3 without those users again, and people coming to this hotel without even knowing it. But on the back end, there has been a white label created for this hotel group that now accepts cryptocurrency. I would say the first step for us, I can't yet mention the hotel group name, but there's going to be a hotel group that's going to accept crypto from their normal guests when paying at the hotel, which will be accepted through Sleep, and we hope to grow this through to all your major hotel groups globally, and that way all people coming to this hotel have the choice to now pay in a new type of currency that they may be using, or it may be new to them, but that way it definitely grows the use case of mass adoption within the travel sector.
That is super interesting to see the growth through those very Web 2 companies and teams. So like imagine like finally getting a button to add payment with crypto to booking.com, and it's like one part you need to have that button thing needs to happen at some point, but the other hand is like you're recognized enough to get that opportunity, you're being recognized as like a viable method of payment. But I want to revert back to something you said a little bit before. So right now the setup can be so easy that people don't even know that they're using crypto, and that touches up on the infrastructure question. And to me, infrastructure versus use cases, it's kind of like a chicken and egg problem. So we need better infrastructure to enable better use cases. But then without the use cases, the infrastructure seems kind of pointless. And we go through that every time we are in a bear cycle. We see lots and lots and lots of infrastructure, and we see no use cases. And everybody's, like, we wish there would be more use cases driving adoption and so on. But then whenever we are in the bull cycle and we have apps and people coming in, then we get stuck on infrastructure, something doesn't work again, we're trying to connect multiple wallets, trying to go through a payment process, and we're frustrated that the infrastructure is not keeping up. So I think it's very, like I said, to me, this is chicken and egg. But I know that we cannot, just ignore the problem. We need to start somewhere. So how do you feel about that? Should the infrastructure be the driver of the of adoption? Can you drive adoption through building infrastructure, or should you focus on use cases and then adjust the infrastructure to the use cases you have? And I'm aiming that question at Shimon because we've had this conversation multiple times.
Where to start? First of all, we've got a great way to deal with chicken and egg problems in the tech industry, and it's called VC money. And it's a very effective way to kind of solve these very sorts of problems. You've got some products that only work when you generate a big network effect, for example, and this is what the VCs got invented for, right? And so every time I hear, there's like, again, this mania on the market and money is pouring in, I'm thinking, precisely because the next bull market, when it's going to start, people are going to complain that not enough infrastructure with enough bandwidth got built, and all of it is crappy compared to the level of interest of people trying to flock into the market. So I think we're dealing sort of well with it, right? And an iteration of that are ICOs, right? Binance got built on that, and so people are just speculating that use cases would come, and they invest into infrastructure, and some of them are ending up doing very well. And I actually think that is great. That's we've got all that. But you asked me, okay, a lot of people seem to be bothered that there seems to be a lot of focus on infrastructure, while apparently seemingly there is not enough use cases to sort of support a case for all of this infrastructure being built. And looking at you here and sort of putting brand names on your faces, because I know many of you here, some of you wear t-shirts of your companies. I can see that probably 70 or 80% of you here are working on infrastructure, which proves the point. But at the same time, I feel there is just such a high threshold to build infrastructure good enough to start supporting use cases that are improving people's lives only 20, 30, 40% over what's available today on the broader market. And every time I think about like how we already managed to build infrastructure that is enough to support 600 million people coming in and investing, and how long it took and how much money it really took. And now that I'm thinking, okay, investing is one thing, but what about payments? But payments is a piece of infrastructure that evolved over decades and is used by billions of people. And so it just makes sense to me logically that it is going to take a little bit longer. And in the meantime, we need to take baby steps. And I think a good way to think about it is that as we progress with building better infrastructure, the friction for end users and for developers gets reduced. And as this friction gets reduced, new tiers of potential use cases get unlocked. And the way I think about it is, okay, the bigger the value proposition, the less of an the less infrastructure investment we need, because people are really invested or driven to use this use case. So if the use case is, you can get rich tomorrow, which is the investment use case, people are going to go through all sorts of hoops. And all of us remember how crappy exchanges used to be just a couple of years ago. Binance improved loads, but still 5 years ago it was a terrible experience, arguably, and still tens of millions of people were super happy to register, go through all of the pain, wait for days or weeks to get verified. And then progressively, as we are making it better, people are happy to start using crypto for other things, maybe for peer-to-peer payments, maybe to buy tickets, or maybe just to play with it and see what it can do beyond just appreciating in value, and move some money out of, say, Binance account into Binance with free wallet and play with some DeFi protocols there. And I think that we are going in a funny way, as we are upgrading our infrastructure based on the use cases of today, we are paving the way for use cases of tomorrow, because the use cases of tomorrow would only make sense if we can make using them easy enough for people to say, okay, that's worth my investment, that's worth the learning curve. I guess now I can start using, stable coins to send money across the ocean to my friends in other countries, etc. So we're doing well.
Just to add up on that question, infrastructure, I will say infrastructure always comes first. With the right and solid infrastructure, you can focus on more and more use cases. Shouldn't be the other way around. And I will explain why. When you have a good use case, solid infrastructure, you match those two, then focus on building that infrastructure will give you access to more use cases. But with a flaky infrastructure, nothing is possible. Two very good examples. Again, if Binance wouldn't have a very solid trading engine, we wouldn't have been able to develop Binance Pay, which focus on the spot trading product. On the same, if Binance wouldn't have one of the strongest matching engines, we constantly put work on it, we wouldn't be able to develop some of the most complex trading products out there, including options and marginated products. So always focus on infrastructure. I see so many startups that focus on 10 use cases, 12 use cases, 15 use cases, but with a flaky infrastructure. Then when you see that the infrastructure doesn't provide what you need for use case number one, it's like a dominoes effect, and they give up. Focus on building. Of course, you need to have a use case first, infrastructure, but after that you have those two, always put more and more on infrastructure, because that's what is going to allow you to keep developing and expanding. Even in Binance, our leadership and what we do every day, they do, of course, encourage every single member of Binance to experiment and to try, build new use cases in the future. Yeah, of course. But at the end of the day, one thing that our leadership has done well in the last few months is focus on one use case, from idea to conception, make it happen well, and then you focus in another use case, and another use case, and another use case. But made it happen well from idea to conception first. That's everything.
I think it's when you mentioned that it's good to always have a point, like have an objective in mind when building infrastructure. Don't build, it's just, I mean, sometimes it's good to experiment with things and then you might end up on something that's like pure gold. But sometimes it's actually better to have this clear goal and clear objective in mind. And a good example of that is the transition that Celo did from L1 to L2. So like the initial setup was motivated by a high fees on Ethereum, and that made it virtually impossible to use on mobile. And then with time, it actually got a lot of criticism, like Celo got a lot of criticism for being a separate L1. Yeah. So the transition right now towards L2 is something that lets you continue building your use cases, but it's also driven and it was started by the fact that Ethereum went to proof of stake model as well. Yeah. So we have that direct connotation between infrastructure enabling more use cases.
Yeah. I was thinking earlier about prior to announcing that we wanted to transition to an L2, we had this idea, and we even posted it to our forum, of becoming a roll-up-centric ecosystem, and being an L1 that we had other L2s roll up to us. And like you said, when we had launched Celo L1 on Earth Day of 2020, it wasn't possible for us to be a part of Ethereum. And now coming home to Ethereum, we can take all of these really strong like infrastructure features that we have, such as paying for gas with stablecoins. Like users, like if we were talking about our moms and our grandmas, if we said, oh, but you got to make sure you have enough in there to pay your gas fee, they have no idea what you're talking about. Like, I need to put gas in my car? I'm not sure what you mean. And so we have things like this that are really making it easier for users. And I think that on the infrastructure level, we need to make improvements so that Web3 appears to be a Web2 app. And so that people do have these moments, like you said, oh, that's it? And so also Social Connect, a feature on Celo that allows you to, instead of this like extremely long, complex wallet address, you can actually use a different identifier, such as your Twitter handle or your phone number or your email address. And then you're able to send a payment to somebody's phone number, not to this extremely long, wallet address that's very complex. And these are things that we focus on the infrastructure level so that we can, like you said, create these different use cases.
Around use cases and infrastructure, I would say Sleep is built around a use case within travel, but infrastructure obviously plays the most important role within the entity. If you looked at when the idea of Sleep started getting built out, most would think these guys are crazy doing a startup within travel just after COVID. If you look at global stats, the tourism sector only contributed roughly just over 4%, and that bounced back to last year to over 9%. So we knew that we had a use case already within the travel sector that hasn't been done before. So we built this product out within the use case to ensure that we're able to perfect our infrastructure during a bear cycle. I'm sure a majority of us here have had a tough cycle, and I'm hoping that we are coming to the end of it, or if not out of it. But people aren't spending their crypto on services or goods within a bear cycle. And that's why we ensured that we'd perfect our product infrastructure within the bad times to ensure when the bull cycle returns, people are more freely using their crypto, there's more opportunity, there's more money to be made. And now we've perfected this infrastructure around our use case, and now we can have a lot more happy users around our platform.
What is the most annoying sort of choke points infrastructurally for your use case?
Infrastructurally, especially within coming into from a Web2 travel service, creating a complete new Web3 native platform, I would say infrastructurally would be users' trust, of users needing to trust this platform of the infrastructure that we've built out. Because originally, when trying to make a booking on our platform, you needed to log in with your wallet. And reason for that is to obviously drive users to use Web3 products Web3 wallets and products to make a booking for their hotel. But we realized that was obviously our biggest blockage, as people are not going to want to connect their wallets just to search for their hotels, especially not knowing us personally or our backgrounds. We realized we're pushing a lot of users away by doing that. So now we've changed the infrastructure of our platform that users are now able to search normally as a normal platform. But if they want that Web3 rate, what we so call it, then you log in further with your wallet as you would on any other booking platform to get an extra discount. And now that Web3 rate, that Web2 rate unlocks a Web3 rate with that user signing in. Because if you use the platform once, you trust the platform, the next time you may be more comfortable to log in, you now trust that platform, you had a successful getaway, you successfully checked in, and now that next moment forward, you're continuously in that user's head wondering if they should take that step forward and now log in, and they will save more on their travels being a Web3 user.
I think bringing up trust is super important in discussion about mass adoption, because the rise of trust in crypto would also signify that we're getting closer to mass adoption. And I think a lot of that, I think there are like different kinds of trust. So you can have trust on the very low level you trust the protocol, you trust the team, you're confident that the app that you're interacting with is legit. But you can also have trust on the higher level, as how is community as a whole perceiving cryptocurrencies? And a lot of that, I think, has to do with the institutional adoption. So what we're seeing right now in the US around the whole presidential campaign, and they're like crypto being used as a pawn in a game, I would say. It also reflects very much on the fact that crypto has entered that space where institutional adoption is a thing. We're seeing that on a daily basis, but what does it contribute to? Because to me, it mostly contributes to trust. Because you as an individual, you would not see that. You would not be the one interacting with that. But what you can see is that media are more familiar with cryptocurrencies. The media, the government are more accustomed with that. And I wanted to ask about that adoption through institutions, that mass adoption understood as institutional adoption. And of course, Binance is leading the way here and always have. So it's good to know how you're perceiving that, how you're feeling that your collaboration with institutions is pushing the growth of the entire Web3 and crypto community.
What we need to understand is that institutions joining the space has never been bigger before. This year has been unprecedented influx of institutions to the space. And this shows, and this is a clear sign, that there is more trust, not only in exchanges, there's more trust on the assets, more trust on the market. With the institutionalization of products such as Bitcoin ETF and Ethereum ETF, we have seen some of the most conservative asset managers jumping in the space. Binance particularly, we have seen hundreds and hundreds of corporations onboarding to Binance this year only. And this is a clear statement that they're starting to trust more and more this market. In terms of what Binance is doing with institutional actors, for us, it's all about generating some of the strongest use cases. With wealth managers specifically, this year we're launching a product called Wealth Pro, which is going to allow wealth managers to manage and distribute the capital of their clients and their clientele on exchange. It's going to be very simple to use, very friendly interface. We're already rolling out the beta phase of this product. And with products like this, we're just going to make it easier and easier for asset managers to jump into digital assets. With a product I named before, third-party banking custody, again, we were the first exchange in pioneering this solution, which is making pension funds, wealth managers, to still use their banks of choice, but being able to allocate with Binance at the same time, be able to trade with us. And that's key for Binance, is just to make sure we keep being that bridge between the institutional world and crypto. In terms of how do we foresee this space growing? Look, we still need to unlock one more type of institutional actors, and those are sovereignty wealth funds. And we're talking about over 4 trillion to 5 trillion in wealth, just locked in sovereignty wealth funds. We're seeing many of them already considering crypto. Japan was one of the first. And we are there. We're just months away from unlocking that last phase. If there is any question, open to it.
I want to save that optimism for the for my last question. But before we go into that, I wanted to tap into a bit more into the again trust, but this time from the community point of view. So adoption through community empowerment is something that I've always really appreciated and admired. And I want to ask Kate about how Celo is handling that. So Celo is focused on empowering those communities. You're very locally focused. You have your targets there. Do you onboard people by? Do you increase the adoption there by developments in infrastructure? Do you build trust? How do you try to activate them?
It's definitely both pieces. So like I said earlier, we have features on the protocol level that allow the use of the Celo platform to be very easy and to look like Web 2. I think that there also is this trust within the different partnerships that we build and the partners that we launch with. But there's also trust that's built with our users and with our communities by just understanding our users and understanding their needs, and also the different user personas. Like even in Africa, when I was down in Kenya last year for the Africa Tech Summit, it was such an eye-opener to me to see that most people treat Africa as an entire continent, and they don't understand that each country, and even within each country, each region is so different. And the way that we position products and we market our products to these different user groups have to be different. In Nigeria, Web3 is much more accepted. And so with MiniPay, it's a stable coin wallet. But in Kenya, Web3 is not as accepted. And so it's a dollar wallet. They wouldn't even know that they're using Web3. They just know that they can hold an asset that keeps the same value as a dollar and be able to pay bills or send it to family or transfer it to pay somebody back for coffee. And so I think it's all of these different pieces, but you can't achieve the adoption, the trust, any of it without having all of them together.
I think it's important to lost my train of thought. What I wanted to add is that when you look at that community adoption and that the infrastructure developments that help you mentioned, and Simon said that as well, and Brandon as well, that you want to make Web3 invisible, and making it invisible is part of achieving that mass adoption. That we need to make Web3 totally transparent, make the users effectively unaware that they're dealing with crypto, to make sure that this is acceptable to them, and something that they use in their daily life. And if we have that perception for crypto, what kind of adoption are we actually looking for? Do we want to make Web3 blend with everything else that we have with traditional finance? Do we want this to be an amalgamate of different ways of managing money? Or do we want to create our own separate community and just get more people in? Because it's a very different approach there. You can think about everybody from outside of crypto ecosystem as sort of an enemy, or you can treat everybody as just they haven't been offered a good enough infrastructural solution to join in, or it's too problematic for them. And it's an open question, so.
I just wanted to add, perhaps in terms of saying invisible, it needs to be smooth. There needs to have no friction. And a big part of ensuring that mass adoption is just removing that friction. And you can see it before and after 2024 with hedge funds. It was so expensive for a hedge fund to onboard in the digital asset space 2 years ago, because They needed a special integration for a custodian. When they needed a special integration for a liquidity provider, then they need a special integration when they need collocation as per IP services. For now, and now you have exchanges already doing all of that in once. We have companies doing all of that in once, which remove the frictions, we remove those operational costs, and ensures more hedge funds and prop desk jump into the space. It doesn't need to be invisible. It will never be invisible. It needs to have less friction.
I mean, if you break open a phone, you still see the insides of that. But that doesn't mean you have to understand that. Doesn't mean you have to care about that. You're just using the phone as as your extension of your hand, and that's it. So I think we're getting what we're looking forward is that crypto becomes an extension of our life that we are aware of, but doesn't mean that we all have to know how the perp dexes actually work.
I agree. And I think when we used to talk about mass adoption a couple of years ago, there was a really big push on education. We need to educate people. We need to get them to understand and know what Web3 is and all of these different aspects of the infrastructure and how it's used. And I think now we don't talk about that because it's not needed. I agree that it's still there. People can know it's still there, but they don't need to be fully educated on it and understand every single aspect of it. We just really need to make it easy to use.
Yeah, I fully agree with that. I do feel like education does play a big role in this, as if you try to speak to a normal person about cryptocurrency, they see it as a scam or they want nothing to do with it. But if they just understood how the basics work, it'll lead to so much more of a large understanding from your day-to-day people, and it needs to happen naturally about the integration from normal traditional people into Web3. Because I mean, look at all of us here sitting in a room at a conference in Warsaw. I mean, there's no community like the crypto community, and I feel that more and more everyday people, when they get to feel actually the passion of individuals and how many people are actually building within the space, I think it's a large eye-opener to the future of crypto and what's to come. As I do believe this is just the beginning, and as mass adoption has started, I do believe it's going to come with haste. And yeah, this is definitely just the beginning of mass adoption, and enjoy the ride.
So, do we want to blend in or stand out? Great question. I think that's we're gonna sort of go into this pendulum of you need to generate something that truly stands out to generate enough interest, and to build infrastructure that would then later allow us to build solutions that blend in. It's if you think about, for example, about the history of credit cards, as much as I know about what I know about this industry is that it started as something marketed for a very particular user base, and many credit card schemes started specifically to serve restaurants and people going to restaurants. So that was very, very specific use case. It stood out. That was pretty different to paying by, say, check. And then it started proliferating. And then you got the opportunity to start paying with cards online, which was, again, a very narrow, peculiar use case. And then it spread out, and now you pay for a taxi with your card, but it's all online. You do not even pull it out of your pocket. So I think we're going to go through similar phases and pendulum in the crypto world. However, I myself spent most of my days working on making crypto blend in. So this is the particular focus of my company. And this is why I tell people that our mission here hasn't ended until we made the entire process of onboarding into a crypto product as easy as buying something online. And we're even trying to emulate the user flow steps to sort of look similar to buying something online in our everyday work. And I think that the next stage for us in Web3, not in crypto, but in Web3 particularly, is to blend in. So to make this entire payment process look super familiar and get to this, oh wow, that's it, moment as fast as we can.
Making it effortless. I think we're very much agreed on on how we perceive adoption there, what we need there. And I want to wrap up this session with a fun story from your past. So we've all made predictions. Like I remember myself saying, yes, gaming will be the big thing, taking crypto into mainstream. I was basically stocking up on different tokens related to gaming teams. Sort of pan out, not fully. And I want to hear your prediction. Like what's, and that's a very difficult construct in English, so forgive me. What have you thought would be the next big thing to get crypto into that mass adoption phase? What was the thing that you've predicted like 3-5 years ago? And what's your vision on this right now? Brandon, maybe let's start with you.
I've been in the crypto industry for about 5 years, and I realized global regulation was completely lacking. And I always, coming from originally South Africa, at the time when I started within the Web3 space, it was not even known within Africa. And it's so great to hear how you're growing the African industry. And I always just hoped for infrastructure within the world around legalities of cryptocurrency. May that have been through governments or institutions, hedge funds coming in, institutional money. And that is coming to play now. So I'm really excited for the years ahead. And I do believe it's going to be a snowball effect. And as more join, the rest will follow. And yeah. That's the way I see it.
You stand by your prediction from before, that this kind of like legal adoption will be the thing that will take crypto mainstream. Michaela, since you have the mic already.
Bold prediction, I do think that Binance is going to cross the 300 million users by end of the year, January next year. Easy. I do think we have...
Okay, we're going to invite you here next year, and we're going to do a checkpoint on that.
Hopefully, fingers crossed. And the second prediction is more based on pure research. As I mentioned earlier, it's going to be, we're just about to unlock one of the biggest accumulation in wealth in history, which is sovereignty wealth funds. We have about 6 to 5 trillion just locked in right there. As I said before, we're already seeing many countries jumping in, Japan being one of the first. So in a few months, we're going to see some of those sovereignty wealth funds jumping in the space, which was, at the end of the day, the last piece of this puzzle, right? We slowly saw more and more different type of institutional clients jump in the space, and that was certainly the most conservative one. So I will say 5 to 6 months, we're going to see just that last piece.
Okay, so getting more funds into the play and locking really big money.
Sovereignty wealth funds, to be exact. Okay, which was one of the most conservative types of funds out there. Yeah, that's where all the oldest wealth in the world is sit. And yeah, I strongly believe we're just 5 to 6 months away from seeing that door opened completely.
Shimon, what do you think?
So you ask actually 2 questions. So my prediction from the past, and I know that it's like the funniest ones are that did not pan out. So I have one for you, and a new one that I have now for the future. So one from the past is that I used to think that a lot of people would move out of centralized exchanges onto Web3 wallets, and that they would do it fast. And after FTX happened, I was like, okay, like this is 100% certain. There's going to be a huge outflow from centralized exchanges. Like people saw with their own eyes what it means when you leave your money on a centralized exchange. They're going to all move it to MetaMask, Trust Wallets, etc. of the world. And then we're going to see the DeFi world and like all sorts of apps flourishing because people are going to be just so much closer to the actual use cases as soon as they would just move their assets from centralized exchanges to decentralized or non-custodial wallets. And this did not pan out. People still trust centralized exchanges. And it seems like for quite some people still, this is the entry point into Web3. And I used to be frustrated with that, but I'm no longer, because hear me out. I have a new brilliant hypothesis of how people are going to actually bridge into Web3, and I think we are already seeing this happening. We saw this trend unfolding already before FTX. So we saw that a lot of Web 2.0 platforms were sort of trying to explore Web3. And a funny anecdote from Ramp, we were very close to closing some big corporate accounts and sort of sell them our solution to onboard their user bases onto Web3. Literally, we had a meeting with Meta scheduled. There was like 6 people on their side and like some people from our side. We were meant to go and do workshops together to figure out how this could look like in practice. Then FTX happened, and then we sent an email, a casual email saying, "Hey, this is the agenda for the meeting." To these 6 people from Meta, and 5 of these emails returned I pinged out an email
because I was
saying I no longer work here, and then one last person, the manager of that team, responded saying, "Oh, sorry, we're winding down, and I'm gonna be gone in 1 week from now as well." So that was pretty sad. But now again, we're seeing some signs of that, and I have a very particular hypothesis of how or where big Web 2.0 companies could have enough motivation to get on board with Web3. So I think that there is this very specific category of tech where these products we basically run our lives on these products. These products have hundreds of millions of users and are terribly under-monetized. And I specifically mean browsers and messaging apps. All of us have probably 2 or 3 different browsers on our phones. We run our lives on these apps. We also have probably a dozen different messaging apps. And the funny thing is that we do not pay a dime to any of these developers. So these developers have hundreds of millions of users and almost 0 opportunities to monetize it. And I think that by rolling out financial services to all of these users, they could potentially start seeing some viable ways to monetize this massive scale that they have. However, the problem is that they are truly global. So to roll something out that is financial in nature, you need to gobble dozens of different licenses, and this is basically not their core competence. So we're seeing right now a good half dozen big companies sort of looking or already venturing into Web3 to try to see if they can monetize their massive network of users by offering financial services, and they chose Web3 as a sort of proof of concept to see if they can do that. And one example that is already public is Telegram. So Telegram announced that their intention is to get 20 to 30% of their massive 1 billion user base on chain by the end of 2028, which is in grand scheme of things, this is tomorrow. And we know about some more companies that are sort of venturing or at least playing with this concept, with this idea. And I keep telling my team that we are going to succeed when Google Chrome is going to decide to go into Web3 and they're going to choose Ramp to onboard their billion users onto Web3. And this is sort of the mental model with which we are trying to operate. We want to build a product that would be a no-brainer for the product manager at Chrome trying to add Web3 and a way to onboard their hundreds of millions, billions of users onto Web3.
Definitely start first with Opera. And Kate, what's going to be your prediction? What was your prediction from the past and what's yours now?
So I think from a Celo perspective, the prediction from the past that I shared earlier about becoming this roll-up centric ecosystem as an L1 and essentially competing with Ethereum at that time with that roadmap ahead was definitely the naive prediction from the past. I think we're on the right path now, coming home to Ethereum and being a chain that's going to extend the functionality of Ethereum moving forward. And I think also I also thought that like wallets and people were really going to catch on to that. When I first joined Web3, I really tried to get all of my friends to like stop using Venmo, just like send it to me in a wallet. And they were like, why would I do that? I can just Venmo you. It's much easier. So some naive predictions there, but I think in the future, I see us just addressing real world problems and real world users. And, you know, I think a lot of us are very lucky from where we come from and the kind of institutions that we had and access that we had to different financial systems, but it's not that way in the rest of the world. So I think stablecoin adoption is going to continue globally. And I think that we are going to get to mass adoption eventually.
Amazing. I'm very happy that we're leaving and that we're finishing this on a very optimistic note. Thank you so much for joining me today. Because we're short on time, we're not going to stay on for the questions, but I think we can hang around there in the expo zone and talk to anybody who wants to continue that insightful conversation about mass adoption. And that's it. Thank you so much for joining me today. And we're meeting here next year, and we're verifying the predictions, and then we're going like, whoever scores the best prediction, I don't know, buy strings or something. I mean,
it's a deal.
It's a deal. Perfect. Awesome. Thank you so much.
Thank you.